we have to know what's happening in China because it's happening everywhere else too. China's gold binge extends to 7th month. Actually, that was back in June. It has now extended to 10 months. So China is gobbling up gold as quickly as they can. What are they preparing for? I said at the time that I didn't think that this was a good idea, that in my opinion, and it is still my opinion, by the MSCI issuing an ETF tied to the Chinese markets, it was about funding the Chinese markets and giving them money. And that happened back on May 31st in 2018. And they are including it at a 5% initial weight, could lead to approximately US dollars 22 billion of capital inflows into these stocks. Well, that benefits somebody, but I'm not sure who that really does benefit. And the result of that was a flood of money into the Chinese markets, which is now reversing or has begun to reverse. But quite honestly, it is still at nosebleed levels. And by the way, who do you think owns this stuff? Let's think about this. Maybe retirement funds, maybe pension plans. I would say that a lot of entities that are investing your money into 401ks, wherever, they're the ones that are really supporting this more than anything else. Chinese home prices dropped at fastest pace before fresh stimulus. Oh, wow. But property investment and sales remained weak last month. Oh my gosh. And analysts doubt latest easing measures will end the housing slump. Oh no. So what happens is the more stimulus they issue, it's like pushing on a string. And I don't care whether you're in China or you're in the US, the more stimulus they create, the less impact it has. Taking on new debt and creating cheap money can make things appear to go up. But number one, every time they do that, the value of the money that's already out there goes down. And number two, it's not sustainable. Well, look at propping up home prices makes people feel rich. And when they feel rich, then they'll spend money. They'll take on more debt. And in China, well, look, it's true in the US. We always point fingers, but we got to look in the mirror. People have been trained to think about houses as short-term investments. It used to be somebody would buy a house. When they paid off their mortgage, they had a party. They buried the mortgage pay documents inside that newel post and glued that newel post on. Glued it on. And then that property was passed down from generation to generation. Because the purpose of real estate began to change. Because home prices had always gone up, people began to believe they always would. That led to more and more Chinese buying homes as a way of investing their savings rather than to live in. And the same thing has happened here. There is a wall of debt that is coming due in this higher interest rate environment all over the world. That means we are having more and more defaults, more and more bankruptcies, more and more layoffs. The Fed may actually get what they want, which is they don't want the public, the workers, to have that much say in their pay. After all, price stability is not that price of that gallon of milk remains the same. It's that you don't ask for higher wages. That, to the central banks, is price stability.